What is up, traders? It is the one and only Alpha speaking. So on today's video, I'm going to be doing a top-down analysis on the Volatility 75 index. If you are new into the channel, you are welcome into the channel. If you are a returning subscriber and a viewer, thank you for the continued support. Without wasting any of your guys' time, let's get started. So right now we are on the Volatility 75 index, and this is the daily time frame. But on the derivative implementation chart is known as the 24 hours chart. So if there's something that I can actually get to tell you with what Volatility 75 index is doing on the daily time frame, is obviously the fact that this is where Volatility 75 index respects retest, right? So you have to note that one down. The daily time frame is where Volatility 75 index respects retest, right? So for an example, we're gonna just start here and show you what is it that I'm actually talking about, or what is it that I'm actually referring to. So for an example, you can see for yourself that right here we had a beautiful head and shoulder like structure, right? So it's not only the retest, you have to keep it in mind, but it's the market structure. If we dive in more deeper, of which is going to be on my next video, I'm going to show you that almost each and every market structure that the market obviously presents on Volatility 75, when you go to the daily time frame, it will definitely be respected. That's just the nature of Volatility 75, and I doubt it will ever change. So for an example, here you see we have a beautiful head and shoulder like structure. Then after that, obviously market boom 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 went down, came back, gave us this double bottom, respected. After then it completed this the shoulder. As the markets were going up, it left a what? It left a low. After the market left a low, broke below, pushed down, and then obviously pushed back up and respected this level. Then after that, markets obviously pushed down, took out this low that the markets did have for us right here. Then after that, boom, you can see for yourself, markets did left another low, of which was later respected. So if you just come here, look at this, you'll see markets respected, but obviously it took some time for the markets to just respect here. It took a couple of days. You can see 1, 2, 3, 4, 5, and on the 6th day, that's where the market actually took the overall direction. But now what's important is obviously you being able to see these structures on the daily time frames, that when you scale down to those low possible time frames, that's where you can literally be able to actually get your entry the right way and know where the distribution is actually gonna be, right? So as you can see, this is what we're having. The markets gave us another low here, of which it only actually took a day for the markets to just respect this and further push to the lower part of the markets. So as long as you know the structure that you actually got from the daily time frame, you are actually good to go, because there's nothing that would literally stand in your way. So for example, if you can just have a look for yourself here, markets broke the low, obviously came back, respected the structure. Now it's pushing to the lower part of the market. So now this is another opportunity that's actually presented to us, but obviously we have to wait for a couple of days for this to confirm. But trust me, once you get this impulse on Volatility 75 index, even if you use the minimal risk, of which is the 0.001, you'd literally make a lot of money from these movements, because Volatility 75 index does pay. I know for a fact, and you also know that fact. So now that I've shown you Volatility 75 respecting structures on the daily and also respecting these retests on the daily, I feel like now you know how to actually determine the market's direction on Volatility 75 index from a bigger perspective. So now what's more important when it comes to Volatility 75 index is that you must trade the trend, right? You don't trade consolidating markets. If the markets are consolidating or we're having a ranging phase just like this, you better stay out of the markets. Just wait for the markets to actually pick the right direction, and from there look out for those retests on the daily, or look for market structures on the daily. You can literally trade anything here. For example, markets gave us a bottom, you can literally trade the bottom, trade the head and shoulder, or trade the retest. You're not actually restricted to trade retest only, but anything that you see on a daily time frame that's a chart pattern that you actually know, you can literally just implement it. It's just that simple. So now that you know about this, let's switch to the 15 minutes time frame. We would actually break it down from the 4-hour to the 1 hour until the 15. But now the thing is, the structure between the 4-hour time frame, the 1 hour time frame, and the daily when it comes to Volatility 75 index is that it's almost the same, like all the time, bro. Trust me. I literally seen this countless times, and I can tell you confidently that it just happens like that. So that's pretty much it. So now when you go to the 15 minutes time frame, as you can see, this is where we actually at. If there's something that has been working and doing wonders for me when it comes to volatility 75 index, obviously after seeing the main or the overall direction from the daily candle and I switch to the M15, is that if there's an entry that you should take that's gonna be more safe for you as a trader after a market reached your level or reached the level of retest, you should wait for a proper break of a chart pattern. There's always going to be a chart pattern on your 15 minutes. You have to wait for it to break, and you need a minimum of 2 candlesticks to actually form below if you're going to be selling and form above if you're going to be buying for you to take the trade. Also, what do I mean by that? Let's just implement it and let me show you guys what is it that I really mean. So I'm just going to have to zoom out a bit. For an example, we're going to start, let me see, we're going to start here. So this is pretty much it right here. Those who have been trading volatility 75 index, they know very well that this pair pays, right? So for example, let's just come here. You can see for yourself, we have an arrow here, we have another one here, and boom, we could possibly have a third one, but we just need a minimum of 2 for us to be able to draw this line. So from here, boom, we can have this line here or the trend line here, and we just wait for the market to literally just break out of that chart pattern. This is what we are having right here. This is the chart pattern, but you literally just need the lower one since you are focusing on selling these markets. We do have your level that you've highlighted, but there's more to the level for you to take an entry, because most of the time this could be violated, right? So we need a minimum of 2 candlesticks to close below. First one, second, then you obviously take your sell just right here, right? Take your sell right here, and you put your SL just right above the first candle to form, and your TP, that's up to you. So whether you use a 1:1, 1:2, 1:5, it literally depends on you, but this is how we actually just catch this trade, right? You can see markets obviously from here respected somehow these levels, went back, but you don't really have to care about that, right? If you love taking risks, like you are a risk taker just like me, you can really just swing these trades, right? You open a trade, then you just trade stop, or you just take the partials, right? So now you wait for the markets again to literally give you almost the similar structure, right? So if you can just come here, you can see we have the first one, and we're having ourselves the second one here. You literally just need 2, a minimum of 2, then boom, you just connect those levels. You can see markets broke. First candle was this one, second, the first candle was this to break and obviously close below. The second was this one, then boom, the third one was here. So you literally just place on the third one, right? After placing on the third one, you put your stop loss just right above the first candle off, which is that one there. So you hold, trade your stop loss. As long as the markets are going to be moving to the lower part of the market, that means you're going to be making money. But if you want to close because you're satisfied with your profits, or you met your daily targets, that's also fine, right? So this is how it's actually looking like. Beautiful target that was actually smashed there. So let me just zoom out. So if you want, you can also like scale in. It's up to you, just as long as you see the similar structures and you know that you and the daily candle are having the same confirmation. That's all that matters. Markets tapped in here, obviously 1 and 2 around here or here. It's up to you when do you actually get the price. So boom, that's another one. You can literally scale in your trades, wait for 2 candles to break. The first one was here, 1, 2, and the third one actually formed just right here, right? And your stop loss must be just right above the first candle off, which is this one. And boom, you've 8 here. So this is it. We could really do this the whole day, but I'm planning on doing part 2 to show you guys more examples on how you can literally trade this. And let me know what you think in the comment section down below, and let me know what you think And also let me know what is it that you'd like me to look for on my next video trading synthetic indices. It could be boom, crash, anything, or psychological videos. Just let me know in the comment section down below. So right now, what is it that we're waiting for? Obviously, we go to the daily. Could literally take a few days. But once we catch this trade, we know that we're going to be swinging this and we're going to get ourselves a good back. You can see market broke the current low, of which is this one. Now we're looking for the market to give us a beautiful retest. Then from there, go to the M15, look for the entry, and we execute and swing. So this is it, guys. I'm going to see you on the next video.